Welcome back to another weekly portfolio recap. We had an action-packed week across the macroeconomy, central bank policy, and major corporate earnings. The biggest headline came straight from Washington. The Federal Reserve wrapped up its July policy meeting, led by Chair Kevin Warsh, by holding benchmark interest rates steady in the 3.50% to 3.75% target range. But the decision revealed notable friction inside the central bank. The FOMC voted 9-3 to hold rates, with 3 dissenting members pushing for an immediate quarter-point rate hike due to persistent inflation risks driven by Middle East geopolitical tensions and energy supply shocks. At the same time, big tech earnings delivered a total split in market sentiment. Cloud powerhouse Amazon surged over 15% on massive cloud infrastructure growth, while Apple dropped over 7% due to rising production costs and chip supply constraints. For dividend and growth investors, this macro volatility highlights exactly why asset allocation, consistent cash flow, and long-term discipline matter so much. Looking closer at sector performance, leadership shifted significantly throughout the week. High beta tech names experienced noticeable turbulence. Inside our portfolio, Nvidia pulled back nearly 3% and Apple dipped over 7%. However, defensive holdings and tech stalwarts held the line. Microsoft gained ground, while our largest individual stock position, Palantir, which currently sits at over $63,000, remained resilient through the choppiness. When macro uncertainty flares up, cash-flowing dividend funds and broad market ETFs step up to absorb the shock. That balance kept our overall principal stable despite choppy market conditions over the last 8 days. Let's dive right into our 8-day performance metrics spanning July 24th through August 1st. We started this 8-day stretch at a portfolio balance of $240,535.37. During the week, I added $1,000 in net cash flow to keep putting fresh capital to work. Looking strictly at price movement and capital growth, our holdings generated $784.86 in pure market gains. Combined with our cash deposits and dividend payouts, our total balance rose to $242,320.23. That reflects a solid $927.37 total gain, or a plus 0.39% money-weighted return for the week. In a week where major tech indexes stumbled, keeping our principal balance moving upward demonstrates the core strength of a balanced growth and yield allocation. Now for my favorite part of the update, the passive cash flow. Over these 5 trading days, 11 different holdings paid cash dividends directly into our account. Here is the exact payout breakdown. OMAH led the week with a strong $48.67 payout. YMAG brought in $23.19 across 2 payments. RITM contributed $15.13. TYG added $13.54. QDTE paid out $11.71. STRC gave us a $10 dividend adjustment. QQQY delivered $9.70. AGD paid $8.94. DIVO added $7.07. CSWC brought in $6.80. And JP Morgan Chase paid $5.14. Altogether, our weekly dividend total reached $159.89. Combined with our $784.86 in market appreciation, our total net portfolio wealth creation for the week reached $1,087.26. That is over $1,000 in total value added in just 1 week. Starting this week, I am also tracking our overall lifetime portfolio data so we can keep our eyes on the bigger long-term picture. Looking back over the last 6 years, from July 24th, 2020 to August 1st, 2026, this portfolio started at exactly $0. Over that 6-year journey, I have deposited $147,681.59 in net cash flow. Thanks to compound growth and strategic buying, our total market gain sits at $94,638.64. Even more exciting is our cumulative passive income. We have officially collected $26,503.24 in lifetime dividends. That brings our all-time total portfolio gain to $121,141.88, representing a massive money-weighted return of plus 244.70%. Crossing $26,500 in lifetime dividends proves that every single weekly payout builds the foundation for true long-term financial freedom. When we open up the dividend tracker window inside M1, our forward projected passive income for 2026 is officially sitting at $15,517.38. We have already earned $9,526.36 in dividends so far this year, with another $5,991.02 estimated to flow into the account over the remaining months. When you break down that $15,500 total into real-time cash flow averages, the compounding math gets really exciting. On a monthly basis, that is $1,293.12. Weekly, it comes out to $298.41. Daily, we are averaging $42.51. And broken down by the hour, this portfolio generates $1.77 in 24/7 passive cash flow. That means every single hour of every day, whether I am working, exercising, or sleeping, this portfolio earns passive income. Every single dividend we reinvest ticks these hourly and daily averages higher, compounding our wealth in real time. Looking ahead to next week, keep a close eye on these major market catalysts. On the earnings front, tech leaders AMD, Palantir, and SpaceX will be reporting quarterly results. On the economic front, we will get the latest US ISM manufacturing and services PMI data, followed by the non-farm payrolls employment report on Friday. If you want to inspect my exact holdings, percentage targets, and subpies, the link to my complete M1 finance pie is in the description below. Thanks for watching. Make sure to like, subscribe, and drop a comment below letting me know how your portfolio performed this week. I will see you in the next update.